In this video, we are going to be analysing Mullen, ticker MULN. Now, to get straight into it, obviously this is the intraday chart. We can see it did close down over 6% on the Friday, but what our main focus is on this longer term time frame. So if we pull this up, there we go. This is what we're really going to be using to get our technical levels. Obviously, if fundamental news comes out, look to play the news, because then again, that's always going to override technicals. Fundamentals are always going to be the key driver of the market. Once you start to see it calm down, or if there is just no fundamental or big fundamental news coming out, you can usually trade quite well off these technical levels as a whole. So if we continue to push to the upside, we're looking at 83 and $1.38, and they're going to be kind of our two closest resistances, with the main focus being on 83 cents, because that is obviously the closest one we have. Obviously that is very far off from where we are now, but considering a stock that went from $16 down to 20 cents, it is volatile. It can make these kind of moves, and that's really why the deviations are wide in the first place, because they can only get wide when a stock is very volatile. So that would be kind of the key levels that we'll be looking at. Again, these do require you to be patient, and that's why at the end of this video we will quickly go over the shorter term time frames, just in case you can't be patient, which again, never a good thing if you can't. But if for any reason you really want to be trading it on a shorter term time frame, we'll give you those levels just so you're a bit more prepared. But again, these are our two closest resistances. If we're going even further, we're looking at $1.50, $2.25, $3.80, $3, $6.30, and a final level at $8.75. Again, yes, some of these levels are very far off. Do you need to pay attention to all of them? No. All you ever need to do is just pay attention closest to where we are now. So we have also a support at 12 cents. So that's really what I mean by all you need to do is pay attention to where you are now at 30 cents. 83 cents and 12 cents would be my only focus, because when it comes into one of these levels, there is a bit more of an opportunity. When you're trading in this area, you're kind of in no man's land. You're taking on a lot more risk. For example, if you got long now, I wouldn't be having it stop until, maybe 8 cents. That's 72% downside. Whereas if I'm waiting, I'm patient, I look to take the trade when it comes into around 13 cents. You still have that same stop down to around 8 cents. You're risking literally half the amount. Again, probably wouldn't be looking to trade it that way, but instead the upside one would probably be a better example. For example, you're trying to trade it short down to that 13 cent target. If you get in now, really you're going to have quite a wide stop. I mean, my stop would always be above kind of that first deviation, which in this case kind of be around 170%. Obviously, so much risk if you're trading in this kind of area. Again, you may have stops in different locations. You might have a previous high, okay, and then that's a bit more managed. But again, that's not how I trade. It's why I use these levels. I'd rather be patient and get high probability levels. So that is just kind of the key thing. Be patient. In this kind of area, I'm not paying attention to it. But like I said, in case you're someone who really wants levels, I'll quickly go down to the shorter term time frame and give you some levels to be paying attention to. And we can see we have then a support at 28 cents. If we went lower, we're looking at 17 cents. Now, this is going to be the key one, because again, breaks that 52-week low, and we got a statistical mean and also a second deviation channel here. So that could be quite a strong level. Definitely something I'd be paying attention to if you were looking to trade within those zones. If we broke lower, we have a final support at 8 cents. Now, what are further resistances? We're looking at 37 cents, going further, 45, 48, 57, and final levels taking us to 72, 67, and 77 cents. But again, really, I would just be patient on a stock like this. Wait for those longer term levels, because they're going to provide much greater risk to reward, high probability setups, and really just probably a better P&L overall on the trade. But again, if you are looking to trade it now, these are levels I'd be paying attention to. My main focus right now is, can we hold kind of this 28 cent level? If so, and really if we kind of break this 34, good indication that will continue to at least 37 cents. But again, that's another reason why I'd say I'd be patient, because what's the risk to reward on this? I mean, you're getting in at say 34 cents as a break. Cool, you have a target of 10%, but that's only 3 to 4 cents. What's your spread going to be on it? Maybe 1 cent? Cool, you got a cent to get in the trade, you got a cent to get out of the trade. You've already lost half your profit. And that's why on these kind of trades, I really would be more patient. I wouldn't be really looking to day trade it, because on these kind of stocks, it's just so easy to lose money. That's why the majority of traders lose money. And that's always a key thing, I would say, by looking at these stocks. See why firstly, why do so many traders lose money, and what are those traders trading? A lot of them you're going to see if you go on Wall Street Bets or anything. I know some of you love this stock, but really, are smart money playing it? Probably not, because again, it's a riskier stock to be playing, and there's better usually risk to rewards on high probability trades. So again, I know I'm going to get hate for saying that. Just look at the comments, there will be some. But I always like to be honest. If you don't disagree with me, cool, let me know. But that's always my thought behind these stocks, and it's why I personally don't trade these smaller ones as much. You'll see whenever I do trade ideas or stream live, we may cover these because I know a lot of people like, and a lot of the audience on Lumley Trading does trade small caps. But again, I always, not say encourage, but kind of just look elsewhere. Don't be so fixated on these small cap stocks. Yes, they can make the massive moves of, they may move 20% in a day, but you can trade that on large caps. Yes, the individual stock may not move that much, but you trade it through options. You can definitely make that kind of move, and usually your setups are going to be a much higher probability setup. But again, that's just my take on it. Obviously, everyone has their own trading strategy. If you're making money, no point changing what's not broke. But if you are losing money trading stocks like this, maybe you're down 50% your bag holding this stock, again, maybe just start re-evaluating. Stop maybe throwing money in a stock that's losing money. But anyway, I hope you enjoyed the breakdown. If you did, why not drop a like and subscribe and check out one of these 2 analysis videos.